Everyone has the idea that tax dollars pay for things, right? You hear people complain all of the time. Who's gonna foot the bill for that? Not me. Everyone from Bob down the street to the leader of the free world thinks that taxes are money taken from the general public, given to the government, and then used to fund government spending back into the general public. Well, what if I told you this idea was completely wrong? Bold statement, I know. After all, why would a guy like me have that piece of information? The truth is, I have no clue. The best guess I have is that maybe I was curious enough to wonder, if I'm giving all this money away in taxes, I'm kind of curious where it's going and why it's being spent the way it is. And then I realized that the answer is that it's actually not being spent. And this answer is out in the open. It's not like it's a secret or anything. You just have to kind of go in and dig it up. So yes, let me repeat that. Our taxes don't pay for anything. The government does not use our tax money to fund anything. The real role of taxes in the economy is to destroy money from the economy. This has huge implications for the way that we can decide our society collectively operates, and I think it's high time that we understood this a little bit better so that when we're discussing it, we can discuss it with all the right information. So you probably have two questions. The first being, hang on a minute, what? What do you mean that our taxes don't actually pay for anything? How does the government come up with money to fund anything then? It's an excellent question. And two, what do you mean that the actual role of taxes is to destroy money from the economy? Let's go ahead and start with answering question number one. When we think about taxes, most of us think of them like this. We imagine that we live in a society where there's this quote unquote agreement between us and the government, whereby every year the government will take some of the money that we've earned and then will determine a way to reinvest that money back into society in such a way that it leads towards the greater good. Whether or not they actually succeed in doing this is a conversation that you can look forward to having next time you're having a dinner with your extended family. But that's kind of the obfuscation right there. Everybody gets fixated on this part, the spending, without realizing it's not actually your money that they're spending. Let me repeat that again. When the government spends money, it's not actually your money that's being spent. So then, what money are they spending? Well, the truth is, thin air. Allow me to explain. If we return to our earlier model, we can call this model tabs. Taxes and borrowing come before spending. We think that the government must tax and borrow from us in order to spend. But in reality, it is S-tab. Spending comes before taxes and borrowing. To understand how this is true, we'll need to take a brief dive into the world of modern monetary theory, or MMT for short. When you bring up MMT in financial circles, you'll find that people generally fall into one of three different camps. On the one hand, you'll have people who think it's the best thing since sliced bread. On the other hand, you'll have people who think it's the work of the devil. And then in between that, you'll have people who've either never heard of it or who are indifferent to it. I think that this dichotomy is a little bit unfortunate because so often we find that the truth is actually somewhere in the middle and that things can both be a little bit right and a little bit wrong at the same time. And that appears to maybe be the case with something like MMT. As one of my favorite financial thinkers, Mike Green, succinctly puts it, MMT is descriptive but not prescriptive. Or in other words, he's saying that it accurately describes how government finances work, but he wonders if maybe we should not follow exactly the types of strategies that MMT proponents are proposing. Would you look at that? A nuanced view. An endangered species these days. Anyways, MMT is the first school of thought to show that S-tab, spending before taxes and borrowing, is the correct way that government finances work. Here's how we can arrive at that fact. Imagine for a moment that you just got hit with a surprise bill for $1,000, but you only earned $500 of income. How would you pay for the bill? Well, you'd have to borrow the extra $500. Now imagine for a moment that you're the government. You've decided that you want to spend $1,000, but you've only collected $500 in taxes. What happens now? You still spend the $1,000 without a problem. You don't need to come up with the extra $500. How is this possible? It's possible because any government that issues its own sovereign currency can at any time generate dollars from nothing. I know this can sound like conspiracy stuff, but I promise you that this is actually the way that it works. For instance, for the year of 2020, the American government spent $6.5 trillion. How much do you think it taxed? Nowhere near that much, only $3.4 trillion. So there's a big gaping $3 trillion hole here. Clearly, your taxes have no bearing on the amount of money that the government can spend. We saw that during COVID. They chose to spend whatever amount of money they wanted to, regardless of how much they took in. But then two things may come to mind. The more financially savvy among you may be saying, well, yes, but what about government bonds, Steve? Don't those finance the deficit between that $6.5 trillion and $3.4 trillion in taxes? And also, what about inflation? If the government can just create and then spend money, won't that lead to inflationary scenarios? We'll get there, my friends. We'll get there. For now, I want to bring this back home. Why is this something that myself or us collectively should care about in the first place? Well, I really started asking more questions last year because last year, I think it was last year anyway, was the first year that I had my major tax bill after becoming self-employed. And let me tell you, that was a very painful one. In the past, when I had an employer, I thought about taxes much differently since they automatically took the tax off of my paycheck. So it's very easy just to look at the amount of money hitting your bank account every month and think, oh, this is actually what I get paid. You tend to think about that amount of money as your actual wage or salary. But let me tell you, you make a lot more than that. You're missing a huge chunk of money in that paycheck. And so folks like me who are self-employed know that when tax season rolls around, we gotta pay a big lump sum of money that we held for the entire year. So it gives you a much different perspective on taxes when you yourself actually have to go and take the hard-earned money that you earned that's in your bank account and then give it away after it already hit your bank account. So if you're self-employed like me, or if you're more specifically a creator or an aspiring creator, today I would like to throw you a bit of a bone. And that is a sweet deal going on right now with today's sponsor, Motion Array. Motion Array has been my go-to spot for years to source video assets like the ones that you see in this video. With any graphic, you can just drag and drop it on your timeline, adjust it to fit your needs, change the color, change the size, all kinds of cool stuff depending on the graphic. I know how hard it is to try and build a visual asset on your own, and a lot of us don't have the time, we don't have the money to build something from scratch. But with Motion Array, a subscription allows you to download unlimited high-quality transitions, titles, infographics, stock footage, and more. And if you use the link in the description, you can get $50 off of an annual plan right now. And probably save a bit of money on taxes too, because getting a subscription like this would be a business expense if you run this as a business. But obviously, confirm that with your accountant first. Thank you to Motion Array for sponsoring this video. I often think if everyone got paid all of their money like self-employed people do, you get all your money and you keep it for the year, and then when tax season comes, you have to pay all your money in taxes back to the government. I think if that was the case for everybody, that we'd have a revolution by tomorrow morning. Anyways, let's answer those last two questions. What about government bonds and what about inflation? Let's tackle government bonds first. So remember how we said in 2020 the government spent $6.5 trillion but only taxed $3.4 trillion, meaning there was a deficit of about $3 trillion? Most of us look at this deficit, which year over year has now grown into a sum total over $30 trillion, and we think that, oh my God, we have to pay this back somehow. Well, I've got news for you. We actually don't. At least not in the way that you probably think. Because, as we've already just discussed, the government can create new currency. So what they do is, instead of using our tax money to pay down this debt, the debt actually just grows bigger year after year because they create new currency to pay the old debt. They create new currency to pay the interest on the debt. And so if you take this train of logic to its end, just that new money creation pays for old debt, which creates new debt, you'll see that we don't have to pay for the debt. The debt's just going to be continuously financed by new money creation. This is why government debt will never ever stop growing until a country is no more. But at the same time, we'll never be on the hook for it. I know this sounds insane, but the truth is often stranger than fiction. And if you really want to blow your hair back, listen to this. If you want to know how government spending interacts with inflation, then we need to talk about the second part of what I said earlier, that taxation destroys money from the economy. If we accept for a moment that taxes do not fund government spending, and that government spending is done by creating new money out of thin air, then we must also accept that inflation is a very real risk. You see, because government finances work in the way that we've just talked about, inflation is kind of the chief risk to be aware of. Because we are continuously expanding the money supply every time the government spends more into the economy than it taxes out, inflation is the gauge we need to watch to tell us when too much money has been created relative to goods and services available. So since the government can create money, which is inflationary, they also need a way to destroy money, which is deflationary. And that way to destroy money is taxation. Here's a useful mental framework to help understand this. Think of the government not as a piggy bank which collects and then spends money, but rather a scorekeeper who tabulates points but never receives or relinquishes those points itself. It is the creator and destroyer of points, not the acquirer and spender of points. That's you and me. So taxation isn't money going into the piggy bank of the government, it's actually the score of the public going down. And the reason the government needs to play the role of the scorekeeper is because if the score of the public gets too high relative to the amount of goods and services in the economy, then inflation becomes a risk. So they need a way to bring that score down, just as they would need a way to bring that score up if the opposite was true. Even though these two things are very different, the scorekeeper and the piggy bank, at the end of the day, the effect is still basically the same. You and I have less money in our bank accounts, and hopefully inflation is kept in check. LOL, it's not right now. But the key difference is we don't need to speak about taxation as if it's my money that's being spent for something. Instead, hopefully we can use this information to have more productive conversations about how to best leverage the superpower of having a sovereign printable currency to make the world a better place, while at the same time not allowing the price of eggs to become out of reach. Or something like that. I don't know, man. It's all super wacky to me. I don't know if I feel any better knowing that my taxes are not going to actually be paying for new schools to be built or something like that, and instead they're actually being sacrificed to the gods of inflation. We think today that we're so smart and we're so civilized and we speak with such certainty about this is right, this is wrong. But you know what? I think in a few hundred years we're going to be looking back on ourselves like this nice cat here is looking out over at his neighbors. That's been the case for all of history, and why would it stop now?